money from my parent. I'm the sub, I'm borrowing money from my parent. Tell me about that, please. It's a related party transaction. Yeah? So if we want to talk about the fact that it's a related party transaction, and therefore there would have to be disclosure in the notes, disclosure in the accounts of the parent that they've lent the money, disclosure in the accounts of the subsidiary that they've borrowed the money. Would it be a related party transaction in the group account? If the parent lends money to the sub has a liability which it has to disclose because it's borrowed money from the parent. The parent has an asset which it has to disclose because it's lent it to its subsidiary. But what happens in the group accounts? They're eliminated on consolidation. So in the group accounts, it's eliminated. So, you know, had this question not been for 7 marks, had it been for 8 or 9 marks, I could quite happily kind of carry on. I also want to assure you that if what you're writing is relevant, if what you're writing, your answer is never going to be the same as the model answer. Yeah, when you're writing, you're going to use different words. And you're going to make different points. And providing you're making a valid point, the markers are experienced. So even if the examiner's answer doesn't specifically refer to related party transactions, they have the discretion, they have the ability to give you a mark if they think it is relevant. But if you write nothing, you're not going to get any marks. Yeah? You happy? You get the idea of what I'm trying to do? Yeah, we'll do some numbers. Yeah, we'll do some numbers in a minute, don't worry. Yeah, you've brought your calculators, haven't you? Yeah? You brought your enthusiasm? Yeah, you brought your Red Bull? Whatever it is that keeps you going? What I would like to do now is to get you to have a look at a question. And although it has a different technical area, because we know how wide the syllabus is, I'm hoping it's an area that some of you might be comfortable with. And this is a question on page 31. Now it's a 5-mark exercise. My proposal here is that we don't necessarily write out the answer in full, but we put together some kind of answer plan which speeds things up a little bit. But what I would like is for you to put together a little bit of an answer plan. Yeah? For you to read the question and then start to think, is there a definition that I know? What's happening in the question? How can I structure my answer? Because it does take several minutes before we start writing. And I'd like you to have the opportunity of thinking about this question here, page 31. Jan. group accounts are such a dominant part of the syllabus, it always gets examined numerically, but there are also some theoretical aspects to it, which sometimes gets tested through the application of the numbers, but often gets tested in little scenarios like this. Explain how the investment in Chan would be accounted for in the group accounts. In theory, if you have an investment, in theory, there are 4 different relationships you can have. Maybe 5, but let's keep it to 4. Could be a sub. When is it a sub? When you have control. Yeah, so when you've got control. Or you could have a joint venture. When do you have joint venture? When you've got joint control. Yeah, I'm trying to avoid numbers. Yeah, because strictly speaking, all these definitions are principles based, not numerical based, although there are numbers backing up that you can sort of lazily fall into. So it could be a sub because you've got control, it could be a joint venture because you've got an agreement to have joint control, unanimous consent, it's incorporated, so you've got rights to net assets. Could be an associate. What's the key definition of an associate? Significant influence. So those are your 3, yeah? And then if it's just a trade investment, it's an equity investment, a trade investment, has to be at fair value. So you're not consolidating it as such, you've just got the investment at fair value. And IFRS 9 would say the default will be fair value through P&L, but technically it's possible for you to make an irrevocable election at inception, and for it therefore to be fair value through OCI. At the start of the year we buy 50%. My knee-jerk reaction is joint venture. This investment gave us significant influence over the operating of financial policies. On one occasion, on more than one occasion, the other shareholders prevented us from doing what we wanted to do. We then buy further 30% of the shares. The investment then gives us control over the operating of financial policies and as a medium-term loan. So for me, there is a change in our relationship. So to begin with, we had 50%, and to end with, we have 80%. On the basis of the information that you've been given, what was our initial relationship? When we own 50%, was it a sub, a joint venture, an associate, or a trade investment? Associate, yeah, I think it was associate. Yeah, my judgment is that we have got influence. Influence means that you often get your way, but not always. You're in a position to persuade, but not in a position to dictate. So in terms of the answer plan, I would start by talking about an associate as something that we have significant influence over. And a good example of that would be board representation. It's a classic example. And I would say at 50%, Chan is an associate. Because the evidence is that we normally, but not always, get our own way. If we never get our own way, if we're always blocked, just an investment. If they are sycophantic and always do what we want them to do, then we're in control. If we are arguing, and sometimes we win and sometimes we lose, and we're always in the debate, and we have an input into the policy, then we've got significant influence. So there's a judgment issue here, And it's not based around the percentage, because if I based it around the percentage, I might think it's a joint venture. It's in fact an associate, and therefore we would equity account. What happens when you buy 30%? Yeah, subsidiary is black and white, isn't it? Yeah? When you buy 30%, yeah, it becomes a subsidiary, yeah, because we have control. Now, it's a particular form of acquisition because you've previously owned 50% as an associate, you then buy 30%, which gives you control, so that will be termed a step acquisition. Yeah? So this would be a step acquisition. So you revalue the first investment to fair value, and you take the gain to P&L. So you're buying another 30%, that gives you control. So you have a step acquisition, and with the step acquisition, you revalue the first investment, and it gives you, now what else do I want to say? Oh, there's so much I want to say. Oh, now it's a sub, fair value adjustment, goodwill. So when you buy the extra 30%, we now have 80%. We've clearly got control, yeah, and therefore that makes it a subsidiary. The form of technical language you can use is that it's a step acquisition, where you are revaluing the first investment, and so to fair value. So when you calculate goodwill, they're both at the fair value at the date of acquisition, and the gain goes to P&L. And we can talk about how we define control. We can talk about how we define control. And I remember how we define control by the mnemonic P, which some of you will be aware of, and some of you won't be aware of. It doesn't matter. Yeah, if you are aware of it already, this is extra revision, but actually you should know the definition. You need to know the definition. What does P stand for? Power. Power to direct. Power to direct the operating and financial activities. What does E stand for? Exposure to variable returns. You own shares. Exposure to variable returns. If you lend money to somebody, all you do is get the money back plus a little bit more interest. If you buy shares in a company, either you get nothing back or you get an enormous amount back. If the company goes bust, you don't get anything back. If the company becomes Facebook, Google, whatever, hey, happy days. So you've got variable returns. If you lend money to Google, all you're going to get back is your money back, plus a bit of interest. You're never going to double the money, treble the money, quadruple the money. Yeah, they owe you the money, so they have to pay it back. Shares don't have to be paid back. So exposure to variable returns is another way of saying risk and reward. If you invest in a company, if you control the company, you are in charge and you have consequences of your actions. Because if you act well, you will benefit. And A is the ability to use the power. Yeah, the ability to use the power. So you're not constrained, the ability to use the power. Intercompany loan is eliminated, yeah? Intercompany loan, intercompany interest is eliminated. Is eliminated in the group accounts. Yeah, again, if you want to bring it in, it's a related party transaction at the individual company stage. to explain how the investment in Chan would be accounted for in the group accounts. Yeah, the medium-term loan of 100 and the interest on that is an intercompany loan, so it's eliminated in the group accounts. At the individual company stage, it will be a related party transaction, a related party balance with a disclosure at the individual company stage. So you could mention that in class. We're building. We're getting there. Yeah? And we're moving into the technical areas on group accounts. We're building. So we can do some numbers soon in respect to group accounts. That's the area that I'm now moving towards. Ethics is definitely going to come up. You're definitely going to have to write about accounting standards. And we know now, or we're practicing our knowledge, revising sometimes our technical knowledge, but always making sure it's about the technique as well. I have no water. I'm imagining. I will make sure I get some water at the break. Partly because it gives me something to do in between a question, but also when your voice is your living, you need to look after your throat, don't you? I like it then. Right, so we are cracking on. Is it break time yet? I don't think so. It doesn't feel like break time, does it? Page 34. Once again, I need to... let me try and avoid the recap. Let me see if you know what's going on here. And let me incorporate a long answer so that you do understand what is going on. But let me give you a chance to read it, and some of you may sort of recognize the ideas and the themes and instantly get the problem. Some of you may have to sort of reason it through, but you all deserve the opportunity of reading the question first. So, 2 or 3 minutes, please. Yeah, let me see if I can find some water.